I have made a major decision, and that is to sell off a portion of my Syfe Wealth portfolio. To be more specific, I have liquidated my Syfe Select Custom portfolio as well as the Syfe Equity 100 portfolio. So I will have my Syfe REIT Plus remaining in the Syfe Wealth portfolio. 2 months ago, I sold my Syfe Wealth portfolio, and back at the time, the S&P 500 index was at 4,000 points. Today, the S&P is hovering around 3,770 points. So are we in a better or worse shape compared to 2 months ago? I leave it up to your decision. But today, I do want to update you guys on my Syfe portfolio, both my Syfe Wealth and Syfe Trade. And something new has been launched on Syfe Trade. So let's go. Okay, so here goes my Syfe Wealth portfolio. So I no longer have any Syfe Core Equity 100, no longer have the Syfe Select Custom. All I have left now is the Honey Money REIT Plus portfolio, and that is the Syfe REIT Plus portfolio that's exclusive to Syfe. Currently, the market value is at $839. My invested amount was actually 1,000 Singapore dollars. So ignore the invested amount of negative here. It was 1,000 Singapore dollars, which means now I have an unrealized loss of $160, and that means a negative 16% loss. You can actually see this rapid decline from since September. If we look at September, market value was actually around $1,000, but it just kept rapidly declining after September, right? That was the worst 2 months, the September and October. Okay, REITs was just taking a beating because of the ever rising interest rates that were announced by the Federal Reserve. Now, if we look at the composition of REIT Plus, here is the current allocation. The highest allocation is on Mapletree Logistics Trust at 10.6%, followed by CICT, Capital Land Integrated Commercial Trust at 10.45%, and Capital Land Ascenders REIT at 10.38%. So the top 4 REITs have already taken 40% of the REIT Plus, namely Mapletree Logistics, MLT, CICT, Capital Land Ascenders, and also the MPAC, the Mapletree Pan Asia Commercial Trust. So these 4 already made up 40% of the REIT Plus portfolio. So if you are interested in the REIT Plus portfolio and you want to check out what are the current composition of REIT Plus, here is the current allocation. But I do want to talk about one of the most popular and best class REIT, which is Parkway Life. Okay, so Parkway Life, you can see that actually Syfe has a very small allocation to it, less than 1%. But if you realize, if we look at Parkway Life REIT, it has fallen more than 20%. And that is a very major drop, you know. If you look at the current Parkway Life REIT, just 1 month alone, it has dropped 11% from $4.30. So right now it's hovering less than $4. If you look at the 6-month chart, it was really high at close to $5. Then it just started plummeting after September. So would I have been better if I sold my portfolio in September, especially my REIT portfolio? Yes, on hindsight 2020, if I had sold my REIT Plus portfolio, I would have saved myself from a lot of losses. But who can really predict, right? Unless you have a crystal ball. So I guess that's how it is. All the REITs in Singapore market has taken a beating, almost 10 to 20% drop from their highs in the July-August period. So all of them started declining from September. So if you are invested in the REIT Plus portfolio like me, most likely you'll see very major losses for these past 2 months. And it has been a difficult 2 months. But let's see, right, whether these strong sponsor REITs like the Mapletree, the Capital, the Ascenders and Keppel, all this stuff, will they thrive in a high interest rate economy and continue delivering returns to the shareholders? So we shall see. So you see, the overall REIT market in Singapore has not been doing very well, but you know, something has been doing very well, and that is my sponsor, Weeboo. I am very jealous of you all. Jealous of those people who have not signed up for Weeboo account, because Weeboo just launched a record high promotion getting you $150 worth of cash voucher. And since many of you still have questions on the qualifying criteria, let's go through some of them. First deposit, you must have a $2,000 first deposit. Now, even if you have used that $2,000 to buy some stocks and the stocks has fallen to less than $2,000, that's fine as long as you have not made any cash withdrawals. Next, you need to buy one US stock or ETF worth at least $100 US. And you can choose any stock, right? I mean, you can choose Apple. Apple is at around $130 130, 140 levels, way above $100, so you'll be safe. The third criteria is you have to make one option trade. So you can just look at Apple options. You can buy a $70 put expiring this Friday at like 1 cent. So 100 units of it will be $1. And lastly, you have to hold your deposit for at least 30 days until your cash voucher reward is credited. And that's how you can use the referral link down below or scan the QR code right here to sign up for your Webull account today. Okay, so that's all about the Syfe Wealth and Syfe REIT Plus. Now let's move on to Syfe Trade, right? Because Syfe Trade has been launched for close to a year now, and I have been using Syfe Trade since the beginning of the year because they have been offering like 2 free trades per month. So I thought, why not use that promotion and automate my dollar cost average trades every month. And so now let's take a look at my Syfe Trade portfolio and how it has been doing. Okay, so let's go to my Syfe Trade portfolio right here. And you can see that my current investment value is at $8,000 with $590 of cash. I think let's move on to the portfolio. This is what all of you want to see, right? I think let's start with Google here. Google is really a disaster. If you look at the past few weeks or even few months, Google just plummeted from their $100 level with their relatively mediocre earnings. In fact, YouTube ad revenue has dropped, but since I already stopped dollar cost averaging into Google and I switched to QQQM, which is the Nasdaq 100 ETF, I wouldn't really care too much about this position. Current unrealized loss is at $677 of US dollars. That is the unrealized loss, okay? And it's still climbing as Google stock keep dropping. If we look at the current analyst ratings, most of the analysts are calling Google a buy at the current price. But you realize that they have been calling Google a buy at even $100. And it has dropped like a further 15% from that. So I guess nobody can really time the market. And even if you look at the valuations, the P ratio, it has fallen to less than 20. Okay, when you thought 20 was good value, it would just keep dropping. Okay, right now it's at around 15. All right, 15 is a very low PE ratio. So that's for Alphabet, that's for Google. I think let's take a look at the more recent one, which is QQQM, which signifies the Nasdaq 100 ETF. All right, current price is at $109 after yesterday's slight up on the Nasdaq index. My average price at QQQM is at $120. Right now, at the current price of $109, I'm losing like $11 per share. So my current unrealized loss is at $284. But take a look at my orders, right? I've already automated all my dollar cost average orders every month. If you look at my October orders, I had 2 orders of $360 a month. So that will be 720 US dollars, which is equivalent to 1,000 Singapore dollars. So I do dollar cost average $1,000 every month in Singapore dollars terms. Converted to US dollars, that's 360 times 2 orders. And the thing I like about Syfe Trade is it's fully automated. I don't have to do any kind of manual intervention to go and place my orders because it will just do a recurring buy. And I even do like an automatic transfer from my bank into my Syfe account. So now you don't even have to manually transfer your funds into Syfe. You can do it automated gyro standing instructions. But something new here, you see, there is BUOU. And for those unfamiliar, this is actually a Singapore REIT known as a Frasers Logistics and Commercial Trust. I actually bought back my FLCT position at 2,000 shares, average price at $1.11. Right now, current price is at $1.09 and giving a distribution or dividend yield of around 6.5 to 7%, which I felt that this dividend yield is justified given that the current interest rates are around 4%. Risk-free if we look at the T-bill, Treasury bill. So I guess 3% above the risk-free rate isn't too bad. But I did want to highlight to you, Syfe has actually launched their SGX trading. Okay, so that means you can trade your SGX stocks on Syfe Trade. And that is a really great piece of news, right? Because if we look at other brokers, they are charging you like $25 per order. If we want to look at Syfe Trade, how much are they charging you? Now, based on Syfe's website, commission is at 0.06%, okay, with a minimum of $1.98. So if we calculate the break-even price is at $3,300, which means that below $3,300 of order, you will still be charged $1.98. Okay, and that's excluding any SGX fees of 0.04%. So your total net commissions is at 0.1%. So I actually bought Fraser's Logistics and Commercial Trust of 2,000 units. And this was my order in 19th of October, right? I bought 2,000 shares. Order value was $2,220. Commission $1.98 since I did not hit the break-even price at $3,300. My trading fee and clearing fee, all these are charged by SGX, not Syfe, so it will apply for any other brokers in Singapore as well. Then GST is like 7% this year, 8% next year. So if you look at my total commission plus fees, it's $3.07, right? $3.07 because my order value is at $2,220. $3.07 compared to traditional brokers charging you $25 when you trade with them. I think it's a big savings, and that's why I really recommend you to use Syfe Trade if you want to buy Singapore listed stocks and banks and REITs or whatever ETFs that you want to buy. But of course, the not so good thing is that all these stocks are actually held in Syfe custodian, which means that they are not held in your central depository account, right? Some people want to put their stocks in CDP account because they can buy and sell from any other broker. But once you're traded on Syfe Trade and you bought your stocks on Syfe Trade, Syfe will be the custodian. But that's not to worry. Doesn't mean that when Syfe closes down, your stocks will go as well, because they have to fulfill the MAS requirements, and these are held in a custodian account separate from the company. So if you do want to use Syfe Trade, then consider using my referral code HoneyMoney, because you can get $70 of sign-up bonus if you made your first deposit of $2,000, and that will help you accelerate through investing. Don't be so scared of investing, because you get $70 when you sign up for Syfe Trade using my referral code, and you can trade US and Singapore stocks. So you see, maybe if you're not started trading, you can start to use Syfe Trade, or even use my sponsor Webull, right? Both of them are really good low-cost brokers. I felt even in Syfe Trade, you can trade like SGX stocks right now. So I think that's a good start for everyone. Just get a sign-up bonus first. Then after that, you can go and choose your favorite broker out of this. So yes, here is my Syfe update every 2 months. Did they meet your expectations? How are your Syfe portfolios doing right now? Are they in a better or worse shape than mine? I think as long-term investors, we are all facing a very difficult bear market this year. So let's hope next year will be better, right? And if you want to know why did I sell away my Syfe Wealth portfolio, both Equity 100 and Select Custom, then refer to my previous video right here, and I'll share with you why.